Indian Energy Exchange, the leading power trading platform, saw its shares crashed by 28% in this week. It was after a major regulatory development that came on 23rd of July 2025. The Central Electricity Regulatory Commission, CERC, announced plans to implement market coupling by February 2026. So, what is market coupling and why did it shake IEX stock so dramatically? Let's break it down. But before that, I have a disclaimer that I do not have any buy, sell, hold recommendation in this particular video. The stock, obviously the IEX or any other stock I'm mentioning in this particular video is not any buy, sell, hold recommendation. If you have any interest in any of the companies, then you can take your own call or can check with your registered advisor. I just want to share my screen to show you the presentation of this price crash. So, okay. Okay. So, first question comes, what is market coupling? Market coupling aims to unify price discovery across power exchanges. Currently, as I already mentioned, that IEX, that in Indian Energy Exchange, is one power exchange. Another one is Power Exchange India Limited, PXIL. And the third one is HPX, that is Hindustan Power Exchange. So there are three power exchanges at this point in time. Each calculate their own market clearing prices. With coupling, a single centralized price will be determined by a common software across all exchanges post this regulation comes into force. Okay. So this change is being applied first to the day ahead market. So what is day ahead market? Like when this power trading is done one day before actual delivery, then it is day ahead market. So this change is like as proposed by CERC will be applied to day ahead market for the time being. Later on, they may consider other mode of market like real time market, long term market, green day ahead market, green dam bolta hai. So all those stuffs. So IEX holds a massive 95% market share in this day ahead market. Try to understand, 95% market share in the day ahead market, which is under regulatory change. So obviously now you can get to know like why did IEX shares crash. IEX earns a transaction fee from this power transactions, a drop in dam volume. Obviously the dam volume which used to where 95% was 95% market share used to be held by uh, IEX. Now it will be distributed among three power exchanges. So obviously market share will go down. Now, up to what extent, that is a different question altogether. Now, IEX earns a transaction fee from these power transactions. A drop in dam volume means day ahead markets volume directly hits its revenue. So, despite the hit, whatever the management is saying, despite the hit, IEX remains optimistic. It highlights its strong integration with clients, 17 years of takeage and service quality. It expects to maintain larger market share than competitors even post coupling. Importantly, this is very important. DAM contributes 35% to 40% of IEX total volume. DAM contributes 35 to 40% of IEX total volume. That's why the impact was severe. The rest means beyond this 40%, rest of the volume is contributed by real time market, time ahead market, which are currently unaffected. For the time being, it's unaffected. It is also pushing new products like green real time market and long term contracts to diversify further. The management states regulators projection of 52 million of extra units from coupling is negligible. Regulator before this, during like as a reason cited by CERC, that it will, this coupling will increase the volume, or rather say decouple, rather demystify lots of volume. So this they have quantified it as 52 million. Now IEX management is saying they are generating 24 billion monthly units, 24 billion monthly units. In respect of that, 52 million of extra units are absolutely immaterial. So operational uncertainty, a centralized algorithm, new settlement systems, and tight timelines make the transaction complex. The management cited the option to appeal for review to the regulator, or even approach to the appellate body also. In summarize, uh, the CERC's market coupling move has triggered fears of lost dominance, reduced volumes, and pricing power of IEX. While the long-term story may still be intact, the market is adjusting to a more competitive future. The next few quarters, especially mock drills and regulatory clarifications, will be crucial to watch. Thanks for watching and subscribe for more business insights.